All right. Well, good afternoon, everybody, and welcome. My name is Robin Miller. I'm Senior Corporate and Tax Counsel for Pro Bono Partnership of Atlanta. I hope everyone's having a good day. I'm looking at the date and saying, how did we get to June 17th already? Time just seems to be going by very quickly. I hope everyone is healthy and safe, and this is not an easy conversation, but I'm so glad you joined us and are listening in. This is the third part of our series on options for tough times. Before we get to that, however, I'm going to briefly go over a little bit of information about Pro Bono Partnership of Atlanta. I guess I'm handling the slides. There we go. All right. Our mission, the mission of Pro Bono Partnership of Atlanta, is to strengthen our community by engaging volunteer attorneys to provide nonprofits with business legal services. So who are those nonprofits that we serve? And most of you on the call know are our clients, but some may not be. So our clients, to be a client of Pro Bono Partnership of Atlanta, you need to be an existing 501c3 organization, located or serve the greater Atlanta area, and serve low-income or disadvantaged individuals, which is a critical element to who we serve, and be unable to afford legal services in addition. So we don't work with large organizations like the American Cancer Society who can afford their own team of lawyers. But we work with a variety of organizations that are all doing their best to serve our community and those in need. We also, if you're participating in this webcast, know that we provide monthly webinars on all different topics. And normally we also have workshops. Only right now we are not doing any live workshops due to COVID-19. Hopefully someday we will get back to those. If you are interested in becoming a client and you're not currently a client, please go to our website and complete our request for legal assistance. You can also join our mailing list and get our newsletters that go out once a month. And in this time of COVID, we've been sending out special alerts almost every week on issues related to COVID-19 for our clients and others interested in that information. So that was a little bit about Pro Bono Partnership of Atlanta. Now our little legal slide that basically says I'm only providing you with general information. I'm not providing you with specific legal advice, and this webcast is owned by Pro Bono Partnership of Atlanta. All right, now let's get to the good stuff. So now let's talk about why you're here. And we started out, this is sort of a three-part series, as I mentioned before. We started out with a conversation around mergers and asset sales. And the whole concept here was, if you're in tough economic times, what are your various options? And maybe mergers or an asset sale is an option. And if not, it could be that you're in a position where you're insolvent. You don't have enough money and assets to cover your bills and your liabilities, and you have to consider bankruptcy. And so we did a second webcast on that by John Mills a couple weeks ago. And now I'm here to kind of walk you through at a high level the process for dissolution in the state of Georgia. And every state is different, so this is very specific to Georgia. Now, this assumes that you don't have to file for bankruptcy. And we can talk about that a little bit more. But the concept is that you've thought through all these other issues. And I will say that dissolution does have a transfer of any of your assets that you do have someplace else. So there is a little bit of connectivity between these three things as we go through this discussion. All right, so why would you consider dissolution? Well, you know, in the world we're facing today, we've had lots of changes. Maybe you've been closed down since mid-March and haven't reopened for a variety of reasons. Maybe you weren't able to spend your government grant money that you have, or other grant money that you have is a reimbursement scenario where unless you provide the services, you can then get reimbursed, and maybe you can't provide the services because of COVID, so you're not able to bring in the money. Maybe, right now the legislature is meeting this week, and they're expected to cut budgets by at least 11%, and it could be that your government grant is going to be reduced or potentially, hopefully not, but eliminated. There's all kinds of issues, and money's going to be moved around. Because the market, crashed and we're basically in a recession with so many people out of work, maybe your donations have significantly reduced, or donations you thought you would be getting from various corporations, the corporations have now come back and said, sorry, we can't do that, or individuals have said, sorry, we can't do that. So you could have a loss of funding for a variety of reasons, all of which may be completely out of your control. Hopefully, if you watch the other two webcasts, you learn that this is something that even if you're good and healthy, right now you should be looking at all of your budgets and all of your obligations really carefully to plan and understand what your cash flow needs are, what your obligations are, and when will you be getting to that point where you're behind. Because you don't want to get so far behind that you have to go to bankruptcy. That's the goal, is to stay away from that, because that's not an easy process, as you learned in our previous webcast. So it's really important to take that extra time to really understand where you are and what your issues are and what your concerns are, and carefully track that. So it could be that you're in a situation where you're unable to pay employees beyond a certain date, or you're not going to be able to pay your rent, in the next month or two. Or you're realizing that you're behind budget, and, you can't just make some cuts. You can't just eliminate some people and then you'll be fine, or eliminate certain programming or activities. But you've got to really take the hard look and really analyze that. And I encourage you to do that not only as employees, but with your board of directors and with your executives, and make sure that there's a lot of all your stakeholders, and there's a lot of people at the table actively looking at this. Transparency is helpful and important. It could be that, because of the circumstances, that it's impossible or impractical for you to operate. It could be that your organization and what you do requires in-person meetings, and for the foreseeable future, you don't know how you're going to do that because your population is at risk. And so it's become impracticable for you to operate. It could be that you just realize that you're just not going to be able to complete your mission. There's a variety of different reasons why you might be considering dissolution, and I'm sure I haven't even listed some of the ones that may be the case. So before you decide to dissolve, you really want to, as I started to say in the previous slide, include your key stakeholders in the discussion: your board, your staff, your major funders, outside advisors, your legal counsel, your consultants, your accountants. You really want to make sure you're getting the best information possible in making this decision. And then really starting to plan and think about, in an orderly fashion, what your options are. Have you looked at that merger or sale of asset? Is there a portion of your programming that could be conducted by another organization that you trust or feel confident about, and maybe you could transfer that to them? When you're dealing with the dissolution of a 501c3 organization, you have the option to give your assets to another 501c3. And in fact, when you dissolve, you're required to give any assets or income, any cash or assets that you have, to another 501c3 upon dissolution. You can also give it to the government, but it does need to go to one of those places. And it's best if it can go to a 501c3 that has a similar mission, although it's not required. But under state law, it must go to another 501c3. Or, like I said, there are ways in which you can give it to the government as well. So when you start to think about, well, what would we do with all of what we've got going on? And you need to take a hard look at your programming and your activities and figure out, what have you got? mean, I've had some clients that literally have no idea what their assets are. They don't even have a list of fixed assets. And so you really need to get your ducks in a row and really start to think through, okay, what are my assets? What are my liabilities? What are my obligations? And what's going to be affected? What contracts do I have? And then what can I do with these various different things? Some have value and might be worth something. You might want to sell some of it and then use that cash to give it to another 501c3. You may just want to give it all to someone else. So you need to really start to think through your overall business and take a step back and kind of look at it. But then you're going to have to delve into the details as well. But get that input from major funders and your board and even staff and accountants and so on, because they'll have ideas and thoughts about the best way to proceed. And everybody has something to bring to the table in these discussions. So it's important to bring them in. So now you've done that analysis and you figured out, we do need to dissolve. We're not going to make it. We have various different pieces and components, and we want to give this part away, and we want to sell this part, and we want all of the rest of what we have, any cash and other assets, to go to 2 different nonprofits, 501c3s. So you can do it that way. You can divide it all up. You can make that decision as to what's best for your organization, or you can give it all to one. I mean, that's entirely up to the organization to make those decisions. But you're going to need to do the hard work ahead of time. And because here's the steps for dissolution. And I'll tell you that what I'm going to go through next is an overview of these steps, and I'm going to go into each step in a little more detail. But Georgia law is very specific, and I highly recommend that you have a lawyer help you through this process because if it's not done exactly right, it can be problematic. And so I'm going to walk you through the process, but I'm not giving you a how-to guide. I'm just telling you at a high level, here's how this works, so that you're educated enough to be able to work well with a lawyer to accomplish this task. So the main steps are, first you have to approve a resolution and to dissolve and a plan of dissolution. And that plan of dissolution is, what are we doing with everything we've got? So that's why I said it early on, it's important to really think through all that and figure out what your plan is. Because that's the first step is, all right, what are we doing? Then you have to notify the Attorney General. The Attorney General of the state of Georgia oversees all nonprofit 501c3 organizations. So you have to notify the Attorney General of your intent to dissolve. And we'll get into what those details include. You also then have to submit a notice of intent to dissolve to your county legal newspaper. Well, that's not the AJC. It's a very specific legal newspaper, depending on your county. You then have to submit a notice of intent to the Secretary of State, then commence your wind down, and then ultimately you file your articles of dissolution with the Secretary of State. Now there's timing that's associated with each of these, and we'll talk about that as we go through the process as well. But each one has specific time frames, and it's important to understand when those things actually should happen and shouldn't happen. A couple other things that have to happen that are listed on the slide and not necessarily in the order in which they happen. But I want to point out number 2, in that wind down process that I very briefly mentioned on the previous slide here, sort of step 5, the wind down process. You need to make sure, if you had employees or you currently have employees, that when you're done and you've wound down and you've let go of your employees and you've closed everything out, that you inform the Georgia Department of Labor that you are closing your business and that you don't need your account with the Georgia Department of Labor any longer. You might also have an account with the Georgia Department of Revenue, and you need to make the Georgia Department of Revenue aware that you no longer need this account. Maybe you had paying sales tax and you had some kind of store or were selling other things. So don't forget about that. Those are things that often are forgotten about in the wind down process. And later, there's somebody that keeps getting notices and the organization has been dissolved. But after dissolution and wind down, you also have to deal with the Internal Revenue Service, and you have to file a final Form 990, and I'll go over that at the end of this webcast. And then you also need to close out your EIN number. You can't cancel it. There is no such thing. No one else will ever get that EIN number again, but you do have to close it. So now let's go through and dig a little deeper into each of these steps. But again, this is not a how-to, this is more informational. All right, so step one is the approval to dissolve. And the first thing to do is to think about what kind of organization are you? Do you have just a board of directors, or do you also have members? And when I say members, I mean actual legal members, not like I'm a member of the World Wildlife Fund and I give them $75, or a member of the High Museum and I have my membership for my family. That is not a legal membership. That's just I get access to the facility, or I get their newsletter or things like that. So if you actually have legal members, there's a whole nother process that you have to consider. So you have to, so you should refer to your articles of incorporation and your bylaws for voting requirements and any necessary meetings and how to arrange such meetings. So your bylaws should clearly state what happens upon dissolution to your organization, but then also if there's any kind of supermajority or greater than a majority that's necessary for voting purposes for dissolution, because dissolution is a big deal. So it's not, sometimes it requires 2/3 vote, sometimes unanimous. You know, it just depends. Rarely is it unanimous, but occasionally it could be. So you have to look at your articles and bylaws and see what they require. Also in Georgia, if you do have members, members only can have very limited rights if you limit them in your articles and bylaws. So it depends on what those say about membership, but members will have to vote if you have members on dissolution. You're going to initially draft a board resolution and a plan of dissolution. And the plan of dissolution covers kind of two main things. First is if you have assets, what's going to happen to those assets? Are they going to be transferred to another 501c3 with a similar mission? Are they going to be donated? Are you going to sell them and then donate that money to someplace else? Like, what is going to happen to them? That has to be in the plan. So when I said you really need to carefully think this through, your very first step is, what is the plan? What exactly are you doing and how are you doing it? So it really does take that thought and time at the front end, which frankly, if you take that thought and time at the front end, it means that your wind down process will be much more orderly and efficient. The other thing, another factor though, is you want to make sure that whoever you say you're giving it to, that they actually want it and are willing to take it. If it's cash, that's pretty easy, but if it's assets, you want to make sure that that other 501c3 will accept those assets. You know, if you're quick claim deeding your property to another nonprofit, they might want to get an environmental review of that property before they accept it. They might want to get a title search done to make sure that they get it free and clear. There's lots of different issues that can come up. So you want to connect with the 501c3 you're considering giving your assets to and talk through it and understand, you know, here's what we're thinking about doing. Are you interested? What are your concerns? And so on. Another key element outside of dealing with your assets that you have is picking the right people to oversee your wind down and dissolution process. Some organizations will keep on their executive director and continue to pay them through this time period. Some people will, you know, depending on the organization and its circumstances, it may fall to a couple of the board members to manage. Understand that if you don't have any trust fund monies outstanding, like you don't owe sales tax money to the government and you don't owe employment taxes to the government, that the board should not be liable unless there's been any guarantees that the board individually has made. The board should not be liable for any of the outstanding liabilities for the organization. But of course, if you're in this sort of dissolution process, we're outside of bankruptcy, and this shouldn't be a concern. But I did just want to mention it. So the people who you're going to pick need to be organized, efficient, and people that are going to follow through to do this wind down and dissolution process. All right. So the first step is that your board of directors is going to vote on this resolution and plan of dissolution. If you have members, you also need to draft a resolution for the members to approve, and you have to call a membership meeting and follow the rules in your bylaws for properly calling that meeting, and then hold it. Now, when the board, if you have members, when the board votes to approve the dissolution, they're voting to approve and recommending to the members dissolution. But until the members approve dissolution, you can't dissolve. So they should look similar. The plan of dissolution should be the same, and it should be very similar resolution. Again, you need to check the state law requirements and your articles and bylaws when preparing these. That's why it's important to have a lawyer assist you. And then you're going to hold your meetings and you're going to approve these. And hopefully that won't be a big problem. All right, so the next step. So now you've got your plan of dissolution. It's been approved. You voted. The next step is to notify the Attorney General of your intent to dissolve. So you have to send a letter to the Attorney General. And you have to describe in as much detail as you really can what's going on. You know, here's the organization, here are our assets, here's what our programming was, here were our funding, here are the funds we have left, and here's how we plan to distribute them. And also, by the way, how much these are valued at. Now, you don't have to list out every piece of furniture you have, but you can say, you know, we have office furniture of, you know, desks and chairs and bookshelves and whatever, valued at approximately X amount. And you can say we have computers and printers and copiers valued at approximately X amount. And so you can group things together. You don't have to give a true fixed asset listing of every specific item. But you also want to describe what you're going to do with those groupings of assets and where they're going and what your plan is for them. Are you selling them? Are you donating them? And then to who? So all of that pre-work that I mentioned, you want to explain to the Attorney General. You want to attach a copy of your resolutions and your plan of dissolution. And you also want to attach a notice of intent to dissolve. Now that's where this kind of gets a little bit tricky. So all of the dissolution aspects of a nonprofit corporation from a Secretary of State's perspective, right? The Secretary of State is where you actually would dissolve because they oversee the creation and dissolution of corporations in the state. All that has gone online. So now what you need to do is download the actual form, and not the online form, but like the PDF form for your notice of intent to dissolve. Fill it out, and that's what you submit to the Attorney General with your notice, your letter, and the other information. So the Attorney General gets all of that. You have not at this point filled out the form online and submitted that to the Secretary of State. You're waiting, but you use the PDF form, download it, and fill it out for the AG. So now we're in a little bit of a hold pattern because you got to wait for the AG to respond. The AG is 30 days to respond. If you don't hear from the AG after 30 days, you can just proceed. The AG's office is really good. Julie Jacobs at the Deputy Attorney General responds pretty quickly. Will send a letter back upon reading it and reviewing it. She may have some questions, she may have some issues, but they do a really good job. And so they'll get back to you pretty quickly. But once you submit that while you're waiting, after you submit the letter to the Attorney General, you can go ahead and submit your notice of intent to the legal newspaper, which is step 3. It has to run for 2 consecutive weeks, and beginning 10 days after the newspaper receives the notice. And this is the only place where there's a fee. It costs $40 for the newspaper to run your notice of intent to dissolve. So why do you have to do this? You have to do this so that the public is aware that you're about to shut down. In case there's any outstanding debt, any outstanding concerns or issues, you've got to kind of put the world on notice. Hey, we're out here and we're about to close. So that has to run for 2 weeks, which works well because you've got that out there while you are waiting for the Attorney General. So, step 4. You can begin this step after either you get a positive response from the AG or no response after 30 days, like I said. Now, this is where I said there's this online electric form on the Attorney General's or on the Secretary of State's Corporation Division website. And it's a very simple one-page form, this notice of intent. So you go into the Secretary of State's Corporation Division, you sign in as an organization, and then just like you do your annual corporate filing every year, and you complete the notice of intent to dissolve. What information will you need? Obviously, you'll need your login information. You need the date your board approved your resolution, and that would include the date the board approved it, and if the members approved it, the date the members approved it. The date your dissolution will be effective, and that will depend on when you can wind down. So you need to put it out. You can choose that it's going to be upon filing your articles of dissolution, or you can put a specific date. There's no fee for filing this. Like I said, the only fee is that newspaper filing fee. Because this is now submitted electronically, you usually get a response back pretty quick, but they say 7 to 10 business days, but it's really usually pretty quick. And then once you receive this acknowledgement, then you can start that wind down process. So the wind down process is all the things we talked about in terms of getting organized and closing up shop. So again, you really don't want to begin wind down until you've heard from the AG or you've waited the 30 days, because they're the arbiter of saying, yes, you can go ahead, and yes, we approve of what your plan is. A lot of organizations are like, well, we want to start, giving this to this group and giving this to this group and selling this. And it's like, well, you got to be careful. You got to wait until the Attorney General said, you got the green light, go ahead. So it's important to be organized and thoughtful about this process. Those 2 people that you identified, and you can identify more, but at least 2 people should be identified to oversee the process. You need to inform your stakeholders. You need to start terminating your operations, so letting go of employees or transferring them elsewhere, figuring out all the different aspects associated with that, sending the separation notices, whatever that needs to be done, closing out your Department of Labor account. You have to take care of all those different aspects of that. If you have a 401k plan, you need to end that and then figure out your process for terminating that or whatever needs to happen. If you have health insurance, you need to work through any COBRA. You need to work through all those details of everything associated with employees. Another thing is if you give out unused vacation to your employees in cash, if that's what's in your employee handbook, you need to go back through your employee handbook and see what's required and make sure you're complying with that. So there's a lot of details with shutting down that you need to be thinking about. And your attorney can help advise you on some of those things. You want to collect all your assets and dispose of them. Are you going to sell some of them and then give the money away? Are you just donating them? But again, you've got to go back to that plan and follow that plan. Now, inevitably, you're not going to follow that plan exactly. A lot of times something comes up and it doesn't work out, or you think you have certain assets that you don't, or you have more assets than you think. So just track and keep a good running track of what you are doing, because at the end, you need to go back to the Attorney General and say, hey, we did what we said we did, what we were going to do, but we had these few little hiccups, or we did this instead, or whatever the case may be. So you want to carefully track what you are actually doing in wind down. If you have a facility, you're going to have to terminate the utilities, terminate any insurance that you have for the facility, terminate your lease if that needs to happen. If you have subtenants, address that. So all those different details you need to take care of. You might have to sell your building if you own it, or are you going to give it away? So all those different things need to happen. So as you can see, this wind down process can be slow or it can be really fast. If you don't have a lot of assets, pretty darn easy, right? Just close up, get rid of any employees you might have, and you're done. If you don't have a facility, it might be pretty quick. But it could take 6 months or even a year to get through this process, depending on what needs to happen. You might have to notify government agencies if you have grant money coming in that you're no longer going to take, or you're canceling a program that you have with the government. You need to work through that with them. You might have to make sure that you're discharging any liabilities. If you have a loan, you need to close out that loan and pay it back. You need to figure out all the different steps. And so that's why it's important up front when you prepare that plan to really have a plan. I like to think of it as not just a plan for dissolution, but the plan for wind down. And take that time to know what you're going to be doing. You also have to dispose of any known claims, and you have to notify any claimants in writing about the dissolution process. So if you know that you have a claim out there, that there's somebody that has a right to something potentially, you do have to give them notice that you're dissolving. That legal organ newspaper notice is one way of generally notifying claimants. But if you specifically know of someone that has a claim against you, potential claim against you, then you need to reach out to them. So basically, you have to do everything to wind down your operations and take care of all of that. And then I'm going to go back a second. So, closing out your bank accounts, terminating all of your activities. And some of these things may be the very last thing you do. But ultimately, you want to plan for and take care of those things too. I'm a list person, so I think the better your list, the better off you are. So as I mentioned earlier, you want to make sure you get these accounts closed. I think that's really important because people will be getting letters later on saying, hey, you have money here, you have to do this, or we haven't gotten this report from you. Where's your report on this? You're late. You have penalties for not filing that report. So it's really important to close those out. So once you've completed this entire wind down process and everything is done, then you're gonna, and that includes, receiving that acknowledgement from the Secretary of State that the notice was accepted, doing the full wind down, transferring everything to where it's supposed to go, closing those bank accounts, notifying the government, taking care of all contracts, taking care of all of that. Then you file your articles of dissolution, and it's at that same Secretary of State corporation's website. It's a really simple one-page form. Again, there's no fee, and it is your final step, your articles of dissolution. Well, your final step with the state of Georgia, I should say. So you file that, and now your operations are complete. And the only thing you have left is the pesky IRS. Now, one thing that's not on here, and remember, before you file this articles of dissolution, you want to send that letter to the Attorney General once you've completed your wind down, informing the Attorney General of what you did and confirming. And they'll say that in their initial letter to you. Hey, let us know when you're done and that you've done everything. So you send that letter off, and then if there's no big changes, you can go ahead and file the articles of dissolution. If you had a lot of really big changes, you might hold off until you hear from the AG. All right, so you've done all that, and now you've got to deal with the IRS. So usually when you dissolve, you don't dissolve at the end of your fiscal year. That'd be nice and neat and put everything in a nice little package with a bow on it, but it often doesn't happen that way. So what you often are doing is filing what's called a short year return. And you want to make sure you state that on that final return, that this is a short year return, and also click the box that this is a final return. If it isn't a traditional year-end return and you actually are dissolving on the last day of your fiscal year, which some organizations do, then your form again is due when it would normally be due, which is the 15th day of the 5th month after the end of your fiscal year. But you want to make sure you get that final form filed. You also want to close out your EIN account with the IRS, and you can do this by mail. And if you have it, it's great to include your original EIN assignment notice. Most organizations have lost that, but if you have it, that's great. You're going to include your legal name, the EIN, and your mailing address as you had it. And the reason for closing your account, of course. So you want to go through that process. So now we've gone through the process with the state, and we've gone through the process with the IRS, and we are pretty much finished. A couple things to think about. You will want to keep your records. So somebody has to be responsible and keep the records from the organization for at least 3 years, if not 6 years. When you pick those 2 people to do the wind down, one of them has to keep those records. It's great if they're electronic and they can just keep a hard drive or USB where they can store those records and maintain them for the period of time that's required. Keep in mind that this process is at very minimum 60 days and often at least 120. And if you're a really large organization, it can take up to a year. So it just depends. It depends on how many assets you have, what type of assets, what you've got going on to determine how long it's going to take. Pay very particular attention to the requirements from the Georgia Secretary of State. It's got to be done just so, or they won't accept it. And again, pick people that are really going to get you through this process and pay attention and do it right. Finally, I've included here our other webcasts that we've done. You can go to our website and in the search box type in mergers and asset sales and it'll come up, or insolvency and bankruptcy, it'll come up. But we also have a webcast on hiring and firing, and we're going to be doing another one on firing or laying off workers very soon, that will go over more detail some of these issues as some of our clients are dealing with these issues.
Still have an asset that.
And with that, are there any questions for me on this process?
And that's the final step or the last thing that needs to be completed. Do you have to hold off on completing the wind down process? Okay. And how much?
You have to dispose of all assets. So whether you sell it or if you can't sell it, you give it away, that's up to you. But you have to dispose of all assets in some form or fashion.
The initial plan to dissolve
before you can file that final article of dissolution. And you can't just give it to people you know either, because that would be inappropriate. It has to either go to another 501c3, be sold, or you can give it to the government too. But you've got to make sure it goes somewhere appropriate.
Exactly.
I'm sorry, I have to tell you that the landscaping people just showed up at my house and it's really noisy here. I apologize. I think what I'm hearing is how detailed does the plan of dissolution have to be? And the answer to that is it kind of depends on what your assets are, but you definitely need to generally identify what your plan is for all of your assets. So if you just have a lot of cash and not much else, that's pretty easy. You just need to say where that cash is going. But if you own buildings and you have fixed assets and you have personal property, you own vehicles, you need to summarize what you're doing with these assets. You don't need to list out each individual item, but let's say you own 4 vans, for instance. You need to identify, okay, well, we're going to sell these vans, and then those proceeds are going to go with the rest of the cash that's going to go to whatever organization, or be divided amongst 2 organizations. Or we're going to donate those vans to ABC 501c3. You know, so you do have to kind of identify pretty specifically what you're doing.